Verdict on the coal block allocation today. What's the sense you're getting? Could there be a chance of a blanket deallocation, or is that highly unlikely? And how do you approach names like GSPL, Hindalco now?
I think it's anyone's guess to second guess the Honorable Supreme Court. But the government has sort of pleaded that 46 blocks which are operational or which are about to get operational should be spared from deallocation. And also a certain penalty up to 95 rupees per ton on the total mined coal be imposed. Now, if the Honorable Supreme Court were to accede to the government's plea, then I think the market sort of would, there won't be too much of a problem in the market. But in case the Supreme Court were to overrule the government's plea and deallocate the entire 218 blocks, then I think one could see a heightened pressure on the market. I think I would remain very cautious. And would sort of wait for the verdict before venturing and buying into any of the stocks whose blocks are sort of whose blocks' fate is going to be decided at the Supreme Court today.
Yes, fair enough. That's perhaps a safer strategy to adopt at this point in time. Let's do one thing. Since there are only about 30 seconds for the pre-opening rates to come, I'll not ask you all questions and cut you off before you finish it. Just pull up the SGX Nifty and check out where things are headed. It's not all that bad, actually. 80.30 is what the SGX Nifty is indicating. Remember, that's a futures index. But it's possible that you're not going to see more than a 5-point cut in opening trades, not perhaps giving us a direction. And we will go over to Manoj to check out how he would trade various scenarios of range trading or deep cuts or bounces that the market might give. That's the pre-opening rates coming up for you. As always, not very, very reliable, but actually they're very sedate. You will have to say we don't have this wonky 1% cut and 1% hike increases. It's just about, okay, now it's getting to a 0.3, 0.2%, okay, 0.5% higher. I think at the moment we should continue to ignore them. Ajay, basically how are you going to approach the markets in general? Let me take only the mid-cap space where perhaps more people are in with trading positions. Do you think it's a little risky now, and which are the stocks you would definitely avoid?
I think the Indian markets, as also all the other emerging markets, are being driven by global cues. And we are seeing heightened risk aversion in global equities due to rising geopolitical tensions in the Middle East, as well as the weakish numbers coming from Europe. I think especially the PMI numbers from Germany, manufacturing PMI and the services PMI in France, and weakening Chinese economy. I think insofar as the Indian markets are concerned, I feel that the markets will remain highly volatile as we are approaching the FNO expiry tomorrow. And let's not forget that the India's VIX rose 7.3% yesterday, the biggest increase since August 1st. Now, insofar as mid-caps are concerned, I think valuations of mid-caps are the most expensive in 8 years relative to the larger counterparts. And that is a sign that the rally in certain parts of mid-cap has gone too far, and investors are adopting a more cautious stance, taking some money off the table in case of certain sections in the mid-cap space. And insofar as the names in mid-caps are concerned, we continue to remain positive on the agrochemical space, where names like UPL and PI Industries. In cement space, I think I heard the previous speaker, Sudarshan, being positive, and I would second that. Companies like ACC and JK Lakshmi are our preferred picks in cement. And in auto ancillaries, LG Balakrishnan and Motherson Sumi. In engineering space, it is Cummins and Crompton Greaves remain our top picks. And in IT, mid-cap space, KPIT is what we are looking at in the medium term.
Just one follow-up question, Ajay. A lot of experts have been indicating that perhaps now the time has come to take profits out of these auto ancillary names like Motherson, Sumi, etc. Would you concur, or do you think that there is still a good way to go for these stocks?
Case of some of the auto ancillaries, as also some of the other mid-caps which have rallied between 2 times and 4 times over the last 1.5 years since the beginning of the rally. I think in Motherson Sumi specifically is concerned, if you look at the large order book position that the company has running into a few billion euros insofar as supply to European biggies are concerned, also, I think the strong earnings momentum that we are expecting in Motherson Sumi, we are expecting 19% growth in earnings this year and around 50.4% growth in earnings next financial year. Juxtaposing that with the ROE profile of the company, which will flare up from 33.5% this year to around 38% next financial year. So the valuations of around say 20.9 times 1 year forward don't look too expensive in Motherson Sumi. So I would advocate holding on to positions in Motherson Sumi and expecting a good return with a 1 year perspective.
Okay. Well, incidentally, the rupee has not opened all that weak. It opened, I think, 11 pice or 9 pice weaker, and now it's about 7 pice weaker, 61.03. All right, 9 pice weaker.
Flat, largely.
Not indicating major cuts. But to be fair, the rupee has been very resilient even through the stock market's gyrations over the past couple of weeks. When the market was rising and when the market was falling, the rupee has been traded fairly ranged. There's a big boy out there with a lot of cash in his pocket, so it's more ranged trading over there. Manoj, well, what are the stocks where you would expect a lot of movement in the next 24 hours? We have 2 trading days, of course. It would have been more useful to ask you this question tomorrow. But nevertheless, where should we watch out for in terms of trades?
Lata, the most important part here is, stock specific, we just look into some quant models where we are seeing the money come out. We all know that banks have a good weightage in Nifty, close to 26%, and we are expecting at least a 1.8% reduction in that. I guess I follow Anuj a lot, he keeps on saying about index management, and I guess he should be happy for the next 1 month because we might be seeing this a lot next month. Okay. I'm expecting the money to come out of banks, specifically the 4 big boys into the Nifty, and it might get into a cement or a power sector. Okay. Now, I know that realty is one sector where we have actually seen, even if you say yesterday, the net money that has come into the Indian markets, the net delivery based selling which has come, that is exceeded by 9%. Usually a realty has around 19% of the delivery of the entire F&O scripts, and yesterday it was a good 29%. Ooh. So we are seeing money coming out of this sector as well as some in the banks, and we are seeing this coming into the cement and the power sector. But specifically, Lata, as I was saying, tomorrow the most important part is the data that we have today will be used for a VWAP trade, but then since it's a trading session, I'd still go with a CESC, somewhere close to a 770 on that. Keep a stop loss, that is 750, and expect a 20-25 rupees positive gain on CSC.
Okay. And you also have Rel Infra. You also have a trading strategy on Rel Infra.
Yeah, absolutely. Lata, most important, yes, Reliance Infra yesterday there is good short which has come in, but the logic that I'm trying to play here is we have actually seen this cash-based selling which has come. That was not much in the first half, and the second half, ideally we have seen some buying which has come in. So Reliance Infra, I guess yesterday's close is somewhere close to 636. I'm expecting we get a bounce till 640. That is the time you should go and buy that, and you get a good 24 odd rupees on that. Lata, most important, I keep on saying that this P-notes are the guys who trade a lot in derivatives, and obviously our weakening rupee always attracts more P-note participation, which was close to 21%, has come down to 18-19 odd percent. So most important, even for the month of October, we are not really positive. We find that, as I was saying, there might be some profit booking. The Nifty, we are expecting a 7,700 in that, and a Bank Nifty close to 15,300. So I would not really go or trade beyond this expiry, because we have a whole 5 days off in the first week of October, and that is exactly why your VIX is so low at 11 and 12 odd percent. So rather doing a a bear spread and put with an 8,000 and 7,600 for October at 55 rupees is what I am do.
All right. The pre-opening rates have now settled absolutely flat, but a couple of stocks are in the news. So EduComp is up almost 8.5% on the back of some reports that perhaps the Varkey Group could be interested in buying its one of its businesses. But the management has said that this news flow is completely speculative, and they're not looking to sell any of their stake at this point in time. So let's see how that stock reacts. But Ajay, a quick word on any of the large caps that you would buy on this dip now?
I think till such time the risk aversion doesn't recede, I would be looking at stocks like Infosys and Wipro in the IT space. In pharmas, I would be very cautious, because pharma has seen an extremely strong rally over last 1 month. So I would stay away from some of the pharma names. And I would look at on dips buying into names like Maruti Suzuki, Larsen and Toubro. And in the banking space, I think the private sector banks like Axis Bank and also SBI are the names that I would look at in large cap space.
Okay. What are your 6-month or 12-month targets, Ajay? There is no wobble at that medium term, is there?
No, there is certainly no wobble. In fact, the fact that global commodity prices are extremely weak and agro commodity prices also are at 4-year low, I think it spells the best news for Indian equities with a medium-term perspective. We are extremely bullish with 18 to 24-month perspective. We are expecting an earnings of 502 rupees in September 15. So we are trading at just 16 times. An average is around 15 times last 10 years average, a slight premium. I think we are going with an earnings growth of 17% this year and around 18% next financial year, which I think will, we believe that, there could be a surprise in store. Because from fourth quarter of the current financial year, we are expecting a sharp increase in aggregate demand for many capital goods construction companies, and numbers for FY16 could sort of, surprise us on the upside. I would say that the markets should touch within 18 months 9,000 levels on Nifty. If sort of the earnings growth pans out the way we are factoring in today.
One shouldn't lose sight of that, but it's nice to hear 17 and 18%, Ajay, after 2 years of single-digit numbers. We
True.
began with 13 and 15% forecasts and dropped to single digits. It's good to hear that at least is intact, or at least as of now the estimates are intact. Manoj, Ajay, thank you very much for preparing us to face what is an uncertain trading day ahead of us. Thank you very much for joining us this morning. Okay, so those are some handy trading strategies.